Hello and welcome. You're watching All About Your Company here on ET Now, and the key today is with regard to the pump manufacturer. There's a huge order win that's come through, and as a result of that, there are two pump manufacturers. Both of them are doing extremely well in trade, and Oswal Pumps is the one that we're going to talk about. It's a new listing which has happened in June of 2025, and since then has given very, very low returns to investors. What's the concern? The first and most important concern, at least for me, is the cash flow. That cash flow number is negative, and cash flow from operations is a huge negative number. It's a negative 150 crore, and that's not because of some capital investment etc. that they've made, because that technically doesn't come into cash flow from operations. What's happened is there's a huge receivable that's lying outstanding in the accounts of the company, and we will talk about that. But that's the first key metric I want to understand from the company. Are they able to turn that around? Is that regular course of business? Receivable days have gone up, working capital days have climbed. All of these are problems that I'd want to understand. So that's cash flow for you. The second piece is with regard to order book. Current order book basis estimates is roughly 1,000 odd crore. They've recently won an order of around 13,000 pumps. It's around a 380 crore rupee order. They already have an existing order pipeline of around 18,800 pumps, which also adds up roughly to around 600 odd crore. So around 1,000 crore is its current order book status. I want to understand that number better, what the execution run rate is like, and how much forward visibility we have on that order book. And why is that so? It's because of the growth that they are penciling in. The growth is 50 to 60% for FY26 on the top line front, and thereafter a 30% to 35% growth is what they're penciling in. And if that were to play out, this could well be a very interesting company trading at around 15 times in terms of the earnings multiple, and that's why this one looks very interesting. Now, when you're looking at the third piece, it's PM Kusum 2.0. What this could likely bring is it could further bring in orders coming through for it, and therefore it could start again looking like a story which could be a multi-year story with PM Kusum 2.0. This is a well-known and a possible trigger for the counter as well. Now let's talk about the fourth piece with regard to competition. How are Oswal Pumps standing out versus some of the other pump companies? How is it that, how comfortable are they in continuing to win orders? And mind you, 25% is their margin and their margin guidance, and therefore that will also give us some amount of flavor on the consistency or sustainability of that margin number. So that is of course point number 6 for you, but let me talk about point number 5 as well. Growth, capacity utilizations, so growth, capacity build up, capacity utilizations, and levers beyond FY26. I'd want to understand all of that. 2.25 lakh is the current capacity roughly. They are looking to, in the next year, ramp that up to 5 lakh pumps, and that is large, and therefore that will also give us visibility on whether order tailwind is there and whether order execution is possible. So all of that is what we will get as part of this conversation. Now let's talk about the company itself. It's a vertically integrated solar pump manufacturer. Therefore, it gets around maybe 200 bips of advantage versus others because it's completely integrated in terms of the pump manufacturing process. It's a leader in the PM Kusum space, especially in turnkey systems. It has 22 years plus experience in the pump systems. It has 2 facilities in Karnal for pumps, motors, and solar modules. And this is a big play under PM Kusum in particular, where it's the government's initiative to try and get more independent with regard to water and energy. And how are they planning to do it? Through the agri space, through farmers, through incentivizing farmers to do more of both their own water and becoming self-sufficient on the water side, as well as getting self-sufficiency in energy. And once both of those likely play out, what you will see is farmers will start selling electricity even to the grid, and for that too there is a provision within PM Kusum. So that's where it's interesting. Now let's talk about the products itself. Solar pumps to start off, that's the key products which are coming on your screen. Then there's electric pumps and motor. No different from solar, only that the solar pumps use solar power and therefore don't need electricity, but electric pumps require electricity. They also manufacture motor, the electric motor, solar modules and pumping systems. They do both of those in terms of manufacturing, and components and ancillaries within this entire space. Now, in terms of revenue contribution, you can see that a chunk, the largest chunk of their revenue comes from agri. In fact, in FY25, it's 97%. In H1 FY26, it's tapered down to 84 odd percent. In terms of, again, the geography where the revenue is coming from, it's mainly Haryana and Maharashtra. The third key state is Uttar Pradesh, which is single digit in terms of contribution to top line. So currently, it is skewed towards Haryana and Maharashtra. Is that a geographic concentration risk at all? Again, we'll try and get a sense from the management, or maybe ask them a direct question if they do indicate something of that sort. Also, I want to also understand some of the revenue metrics, or where does the revenue come from product wise, and that's what you're getting in terms of a snapshot with regard to where the revenue is coming from across different products. So that's a snapshot of that. Now let me go across to the metrics, and we have 9 metrics that we're going to talk about today with regard to Oswal Pumps. In terms of the revenue, you can see the way the revenue has gone from around 385, which is sub 400 crore, to currently 1400 crore. The revenue has grown at a compounded annual growth rate of 58%. That's the 3-year CAGR on the top line of this company. In the meantime, they have listed. They also used the debt to scale up their operations, thereafter repaid the debt listing. So all of that has played out since. Let's look at the EBITDA as well, and you're seeing that second line over there where EBITDA has gone from 58 crore to 420 crore. It's a very, very sharp increase over just the 2 years. But if you look at the 3-year period, the EBITDA is 10x from 39 crore to 420 crore. It's compounded at 121%. So very strong compounding that we've seen. Profits as a result have just gone from strength to strength. From 17 crore, they've gone to 281 crore from FY22 to FY25, compounding at 155% on a CAGR, revenue CAGR basis. H1 FY26, very comfortable from that perspective. If you see the numbers, 54% YOY growth in H1 FY26 on the top line, 33%, some bit of margin compression that we've seen on a high base, and profitability compounding at 41% as a result of that. So very strong numbers overall. No concerns with regard to the top line growth itself on the P&L. Let's look at the operational metrics now, and this signals how much bandwidth the company has to play around. And you look at that, you look at the margins that have gone up from 11% to 26%, and now the guidance seems to be that it will sustain in around this region, but it's currently at 26%. At the peak, it was at 29% in terms of EBITDA margin. So plenty of bandwidth to play with in case competition comes in. Order book stands at, again, that's part of operational metrics, stands at around 18,800 pumps. They've won a new order of around 380 crore on top of the H1 FY26 number of 18,800 pumps. The new order is around 13,700 pumps. I did mention that. And now the order book size currently stands at just about 1,000 odd crore. FY25 revenue was 1,430 crore. So for perspective, the book to bill is 0.7 times. So that's on the operational metric side. No concerns as of now. Now let's look at the balance sheet. And in the way in which shaping up, you look at the way in which the equity shareholders funds are currently at around 1,500 odd crores, so trading at around 4 times, 4.5 times book at this point. That's by the way, the market cap of the company is around 6,300 crores, so that's something to keep in mind. The borrowing number is 116 crore, so no real concern between equity and debt. There's a fair degree of comfort there, so no concerns on the balance sheet either. Let's look at the cash flow, and this is where the key concern really stands out. You look at the way in which the negative cash flow from operations has come in, 151 crore in FY25, and I want to break that down. The receivables number was 418 crore. That's what the receivable number went up by. Inventory went up by nearly 100 crore, and that's why you're seeing operating cash flow being in deep negative territory despite a very, very strong EBITDA of 420 crore. So these two alone contributing a negative 520 crore on that EBITDA number, which is exactly what has played out. And while FY23 was okay, FY24 and FY25 have been difficult years where you've seen receivables climb, as well as inventory climb. I want to understand whether this can unwind. This is a key and a large concern. Let's talk about now the ROC and the return ratios. Now, in that sense, it's done very well on the return ratios count, because for a company with such a high working capital requirement and where working capital days have climbed so badly, the ROC has remained very, very strong. So no concerns with regard to ROC. It's a clear thumbs up where ROC is concerned. We've seen very, very strong numbers where ROC is concerned. Can they continue to sustain that? Well, that's the goal, that's the aim. But we'll have to, of course, wait and watch and understand whether that plays out going forward. It's a recently listed company. You want to keep cautious with regard to that. It's a recently listed company. Let's talk about the shareholding now. Promoters own around 76% of the company. They continue to own that, no problems. FI is 4%, DI is around 9 to 10%, and public holds around 11 odd percent. The public share, or the total cumulative number of shareholders, have fallen from 99,000, understandably, during listing, to around 90,000 now. So they've eliminated around 10,000 odd shareholders. We'll obviously have to wait and watch as to how that plays out. But you look at the IPO price and the listing price. The IPO price was around 614, it listed around 634, so it listed at a gain, but it currently sits at a negative 12%, which is a 12% loss versus the IPO price. So the current stock price is actually lower than the IPO price as well. So if you're a holder, this certainly should interest you. 6 months, over the last 6 months, the stock performance is negative 12, and over the last 1 month, it's negative 19%. In fact, we've seen a bounce up from the lows already. So we've seen a 10% jump from the lows of the last 1 month or so. There's only one analyst tracking this company, which is IIFL Institutional. They have a 22% upside on it. So no comfort per se, just one analyst tracking it. In fact, their numbers and estimates differ very, very large. There's a huge difference between their estimates as well as what the management has guided for in terms of FY27 numbers. You want to be cautious on that count as well. Let's talk about management commentary. FY26 growth at 50 to 60% is what they're penciling in. EBITDA margins 25 to 26%. Capex of around 90 crore on pumps. 270 crore on solar is what they're penciling in. Volume of around 225,000 pumps at this point. 50% of that is solar. Beyond FY26, the growth is expected to taper down to 30 to 35%, and pump capacity of around 5 lakh pumps per year by H1 FY27 is what they're guiding for. PAT margin of around 17.5% to 19% is what they're guiding for. Now let's talk valuations. And when you stack up that valuation number and we just pull the numbers forward for a couple of years, that's how the numbers stack up. It's trading at 12 times FY27 if the management guided numbers actually play out. We've taken a slightly lower margin number, and we've taken the bottom end of the PAT margin estimate as part of our estimates when we are looking at valuation. So when we stack up the full picture, around 16 times FY26 and around 12.5 times FY27 is what this one is trading at. Let's pull up the summary chart as well, which kind of shows P&L is definitely a thumbs up. Operational metrics is a neutral. Balance sheet is a thumbs up. Cash flow is definitely a thumbs down, very poor. Return ratios, shareholding, both are thumbs up. Return and analyst recommendations, well, that's a thumbs down, because we're not likely to see too many analysts cover this one, 6,000 crore market cap and the like. Management commentary, we're being neutral because this is a newly listed company, and valuations surely thumbs up. So that's how it's playing out. Now, let's go across. We have Vivek Gupta, who's the Chairman Managing Director of Oswal Pumps, joining us live for this conversation. Okay. All right. So we believe the management has in fact cancelled with regard to the conversation. This is a first, but anyway, let's go across. We have a conversation lined up for you with Jim O'Neill. Listen into a slice of that.
China and India together try to get closer. If they do, I would say is amongst the top three, if not the single most important thing in the world, because of course China and India have had immense strategic security and diplomatic rivalry for so long. But if however difficult it would be, if they are now choosing to put those things aside and try to cooperate deeply on international trade and investment matters, as well as things like climate change and many others, it would be transformational, certainly for the whole of Asia, and because of the importance of them both, transformational for the world. And that is something which I am watching, and I suggest other people do really closely, because it would attach so much more importance to the BRICS political grouping if China and India had a more cooperative basis. But if they didn't, then the BRICS group will effectively be largely symbolic. And yes, they will all make lots of noises about various topics, but it will be a little bit empty unless there's more substance, especially between the biggest members.
Point taken. But Jim, other than diplomacy, what key reforms do you think India must undertake to truly leverage its demographic advantage over, say, the next decade?
Yes, it's very, very good question and interesting issue. You know, I read some interesting longer-term reflections on what the Indian leadership wants to do by the time of the 100th year anniversary of India's full independence, and effectively to become a middle-income country. And if you translate into the kind of economic growth that's needed, that requires India to grow by 8% the next 2 decades. And its demographics are so powerful still. In theory, that should be relatively easy for India. And of course, that is what China did for 30 years until about 5 years ago. And in order to unleash that, India has to be more successful on about 3 or 4 areas, I would say. One is somehow allowing or encouraging India's labor force participation to be more structured, and therefore to be a bigger and more sustained player in aspects of the modern, sophisticated manufacturing chain that links the world. Secondly, and as part of that, India has to still make a lot of progress on the challenges of having a vastly improved productivity sector in agriculture, which of course is such a dominant part of Indian society still. And then thirdly, linked again to both, it has to somehow manage to improve the basic primary and secondary education for so many Indian people that get left behind and don't really benefit from what has been so far in a challenged world environment, a glorious decade so far for India. But a lot of Indian people haven't benefited from it. And then the very last thing is as with China and other big emerging nations, India has to be more proactive on the fight against infectious diseases, including something I've become very involved in the past decade or longer, antimicrobial or antibiotic resistance. But India could do all of these things. It just needs continued determination and strong leadership and open-minded thinking from the leaders and the advisors of India today.
Jim, if you look at global economy as a whole or global country, many countries, they're now focusing more on domestic rather than being, a trade-oriented free market economy. Do you think, given these factors, what role does tariff, play for countries like India, and how India will be able to meet the targets that we have set out for the 100th anniversary?
So I think about this in a sort of a bit more open-minded or non-static way, let's call it. Very interesting coincidence as we turn this year. The United States under Donald Trump, quite amusingly in a way, has just inherited the rotating year of chairing the G20. And I participated on a call with the Chicago School for International Affairs last week, where I've become a visiting fellow. And I suggested that a way to try to encourage Trump and his advisors to get away from this obsession of tariffs is to resurrect something that a previous US Treasury Secretary under Obama tried and became very close to achieving in the early part of the last decade, in 2011-12, and that was to introduce some kind of monitoring zone for the balance of payments current accounts for really
11%, which is extremely low. So EBITDA to cash flow conversion does not seem to be happening. That is your one big problem. So while you have a very strong top line growth, while you have revenue coming through, and we have Subodh Kumar, who's the CFO at Oswal Pumps, just joined us on the phone line. Subodh, thank you firstly so much for joining us. Let me understand your cash flow position. Give us a sense of what's happening on the receivables front. When does this receivable number unwind? When do you start receiving money, or when does the money start coming in? When does your working capital cycle start to improve? Give us a pulse of that first.
Yes. So, can I first of all thank you very much for calling me, and thank you very much to giving me such opportunity. So I just want to clear that right now definitely you rightly said our cash flow is negative, and that is even though our revenue growth and other operating growth is very good, but according to that our operating EBITDA and operating cash flow is negative. This is because of the debtor periods, because this if you look at our September numbers, so our debtor period is around 100, our working capital period is around 157. So if you look at the net cash flow, that is around 70 crore is negative. So we are trying to get it reduced by 20 to 25 days at the end of the March 2026. So we are continuously focusing on our debtor periods. So and some of the government have already taken the initiative to release the payments. Like the Magaltal, they have taken the loan from AI Bank. So already they got the loan, and we are expecting that this quarter and as well as in the next quarter we will get a good amount from the Magaltal operations. So that definitely it release our debtor periods to come down to 130 to 135 days. So according to that would after that our cash position and our operating EBITDA cash flow would be on a positive side.
Sure. So Subodh, this will likely continue even going forward, right? You will continue to face this problem going forward as well. Is that correct in terms of an understanding?
No, that
okay.
Yeah.
So what has gone wrong in the past which will change in the future? Give us a sense of that.
Yes. So I'll let you know. So last week, in approximately on 26th of November, so there was a meeting with M&RE guys. So our promoter and our sale head has already attended that meeting, and we proposed to them that please work on this payment periods. And we all of the industry leaders have they suggested to them to get the security against the BG which they hold from our side, bank guarantee. So once this proposal, some of the proposal which we proposed to the government, like the issue of the security against bank guarantee, release of 10% payment which they hold on the from our order. So if they accept our 2 or 3 the proposal, that definitely it would reduce the debtor payment would reduce to 120 days. So once it in line with that 120 days, so our cash position for the next quarter as well as for the next the period, it will be on a positive side.
So where do your working capital days go therefore? You said it shrinks by 25 days in this year itself. Where does it go next year as the unwind happens?
Yeah, so next year we are trying to, it goes to 120 days.
Okay, 120. Okay, fine, understood.
Yes.
And Subodh, give me a sense. PM Kusum 2, when is that penciled in? I believe it's penciled in very early calendar year next year. And what kind of an opportunity does it present for someone like an Oswal Pumps? And what is competition looking like for this entire space? How is competition shaping up?
So regarding the competition is on a higher side. There is no the business in the competition. So competition always would be on a higher side. If this scheme is very attractive schemes. If you look at these industries and look at the schemes when they started. So everyone has good profit, everyone has good top lines. So according to that, if everyone is attracting from these schemes, and there will be in terms of the competition sides, there will be no compromising competition. But from our, as if I talk about our Oswal Pump Limited, so you know, if these schemes come with the initially 30 lakh pump, which means to around 10 lakh pump per year, that the Oswal Pump would never be look way back.
Understood. Okay. And give us a sense, Subodh, with regard to how one pencils in growth for you over the next 2 to 3 years. So current year, you've guided for a 50 to 60% top line growth, which is very impressive. Where does it go in FY27 onwards? Can 30%, you've guided 30-35%, but on the base that there will be, can you continue to grow at 30-35%, and for how long?
So, you know, last IR call, so we already, you know, spoken that we will definitely keep our growth on the 25 to 30% on a CAGR basis.
Okay. And margins, Subodh, what changes? FY23, your margins were just about double digit. Currently, you're sitting at 25%. Some bit of backward integration, of course, helps. But what has driven these margins higher? And I'm trying to understand sustainability of that number as well.
So, you know, though regarding the sustainability, so we are hoping this margin to be still at 24%, 24 to 24.5. So, you know, regarding the backward integration, so our promoter and our internal teams are, you know, working on a day-to-day basis to for the value engineering in the production side, and we are also, you know, we are also targeting to reduce our the value engineering to increase the margin in the value engineering side. So we are fully, you know, prepared for that and keep this maintained on this side. And we'll keep on this side.
With regard to your capacity, it goes up from 2.25 lakh pumps to 5 lakh pumps. You do that in the next 6 to 7 months. Where does your capacity utilization lie? And is order flow strong enough to support the kind of capacity you're setting up?
Yes. It will be. It will definitely be. You know, there is a copper with that demand which we are expecting in the future.
Okay. And what will your capacity utilization be at 5 lakhs?
Yeah, but you know, regarding the 5 lakh, we are increasing our capacity in the phase manners. So right now we are standing at 2.5 lakh. So you know, till June 26, we are it would increase to, you know, 3.5, something like that. And then and the second quarter of the next year means till June last one, in the starting of the second quarter, it would go to then 5 lakh. And accordingly, that is you know, which we are expecting, and accordingly we are increasing the same. We will increase the same.
Okay, understood. Okay, Subodh, firstly, thank you so much for coming in. Completely out of time on this edition of All About Your Company. And viewers, thanks so much for tuning in. Hope this was helpful, of course. And thanks for staying with us here on ET Now. That's a goodbye from us on this show.
Worth sharing. Faster Wi-Fi on the new Emirates A350.
अपने दिल के हिस्से की सेफ्टी से समझौता? नो चांस। इसलिए पॉलीकैब ग्रीन वायर्स, जो है लेड फ्री और इमरजेंसी में दे कम टॉक्सिक गैस। पॉलीकैब ग्रीन वायर्स, इंडिया सेफ हैप्पी कनेक्शन।
Presented by